The role and functions of the Reserve Bank of India. When you look at a currency note, have you noticed the word Reserve Bank of India written on the top? Have you wondered why the Reserve Bank of India is mentioned on the notes? This is because the Reserve Bank of India issues the currency notes. In every country, there is one organization which works as the central bank. In India, the Reserve Bank of India, that is RBI, is the central bank. The primary function of the central bank of a country is to supervise and regulate the banking and financial institutions of the country. By doing this, it makes sure that the banks in which you keep your money are safe for people to keep their money. RBI also promotes economic growth by keeping prices stable and interest rates reasonable, and also provides various services which help people like issuing currency and processing electronic payments, etc. The Reserve Bank of India was established in 1935. The main functions of RBI are: Monetary Authority. RBI helps in controlling the inflation and supply of money in the economy. The overall goal is to promote economic health of the country and ensure prices remain stable. This allows people and businesses to make better buying and spending decisions. With stable prices, the economic output increases, and with reasonable cost of borrowing, businesses can borrow to further their operations. If interest rates are high, people may not spend, and hence, economy will not grow. Hence, RBI ensures that prices and interest rates remain steady. Issuer of currency. Ever wondered from where the notes and coins which we spend come from? The notes and coins are issued by RBI, who ensures adequate supplies of currency notes and coins and in good quality. Have you seen that all currency notes issued by RBI have, "I promise to pay the bearer the sum of rupees," written on it? This is called the promissory clause, and it refers to the bank's obligation to pay. Every banknote issued by RBI also has the signature of the RBI governor on it. Banker and debt manager to the government. As a banker to the government, RBI manages the banking needs of the government. It collects receipts and makes payments on behalf of the government. Banker to banks. RBI maintains the banking accounts of all banks. This helps various banks to exchange funds between themselves. For example, your parents pay your school fees through online transfer, but your parents' account and that of your school may be different. In order to facilitate smooth interbank transfer of funds, the banks need a common banker, which is RBI. Manager of foreign exchange. The RBI is a custodian of the country's foreign exchange reserves and maintains the foreign exchange market in India, which includes supply of foreign exchange in India. It maintains the exchange rate of the rupee. Regulator and supervisor of the payment and settlement systems. The RBI, as a regulator of the financial system, has developed and established strong payment and settlement systems to ensure efficient and faster flow of funds among various constituents of the financial sector. You may have heard of some of these, like the Electronic Funds Transfer, ECS, which is used to make payments between two accounts or mobile wallets. Maintaining financial stability. As a regulator and supervisor of the banking system, the RBI has a critical role to play in ensuring the system's safety and soundness on an ongoing basis. Developmental role. The Reserve Bank has taken an active role in supporting developmental activities in the country, like ensuring loans to poor farmers and access to financial services for all Indians, and encouraging efficient customer service throughout the financial industry, resulting in financial inclusion. Thus, RBI plays an important role in helping the country achieve economic growth.